All right, I want you to picture this. It's Wall Street, 1987. The stock market feels like a party that's never going to end. Everyone is making money hand over fist. But in one office, a trader named Paul Tudor Jones is looking at his charts, and he's getting a serious case of déjà vu. He sees these spooky similarities to the lead-up of the Great Crash of 1929, and he starts preparing for what would become one of the greatest trades in financial history. And then it happens, the day that would be forever known as Black Monday. The storm finally hits. All around the globe, markets are already in total freefall. And when that opening bell rings in New York, it's not a starting gun, it's a fire alarm. Pure, unadulterated panic just floods the trading floor. Fortunes that took decades to build are vaporized in a matter of hours.
Let that number sink in for a second. 22.6%. That's how much the Dow Jones Industrial Average fell in a single day. To this day, it is the largest one-day percentage drop in the market's history. For pretty much everyone, it was an absolute unmitigated disaster.
But I said pretty much everyone for a reason. Because as the world was melting down, Paul Tudor Jones and his young hedge fund, well, they weren't just surviving, they were making an absolute killing. Which brings us to the big question, right? How? How on earth did he see this coming when almost no one else did? And how did he find the nerve to bet against the entire world?
This is the story of that man, Paul Tudor Jones, or PTJ, as pretty much everyone calls him. He's the guy who didn't just dodge the bullet on Black Monday, he caught it and turned it into gold. This single event transformed him from just another smart trader into an absolute Wall Street legend, practically overnight.
So what in the world is a global macro trader? Think of it this way. They don't just look at one stock or one company. They're looking at the entire planet as one big interconnected financial machine. They trade everything: currencies, bonds, stocks, commodities, all based on these massive economic trends. And PTJ, well, he's basically one of the grandmasters of this game. But, legends like this aren't just born with these skills. They're forged in fire. So what was it that shaped Paul Tudor Jones into the trader he became? What were the key moments that gave him the ice-in-his-veins composure to thrive when everyone else was panicking? What I find really fascinating here is his first move right out of college. The guy gets into Harvard Business School, and he turns it down. Why? He said he wanted a real education. And for him, that wasn't a classroom, it was the trading pits of the New York Cotton Exchange. He wanted to be in the trenches. He starts his own fund at the ripe old age of 25 and gets thrown right into the deep end, learning some incredibly painful and incredibly valuable lessons right away. And this, right here, was the moment everything changed for him. He took some huge, painful losses early on, and a lot of people would have just quit. But for him, he called it cathartic. It didn't break him, it reforged him. It seared into his brain this fanatical obsession with discipline and, above all else, with managing his risk. He swore he would never, ever let one bad trade knock him out of the ring again. So, all those early battle scars gave him a set of rules, a kind of secret code that he lives by. And these rules didn't just guide his epic 1987 trade, they've guided his entire career. So let's break them down. His first rule: it can actually be boiled down to a single number: 200. So, what's so special about 200? It's his ultimate defensive line. The 200-day moving average is just a simple tool that shows you the long-term health of a stock or a market. For PTJ, the rule is brutally simple. If the price drops below that line, he sells. Period. No emotion, no second guessing. It's his non-negotiable tripwire. And guess what? The market broke below that line right before the 1987 crash. That was all the signal he needed. Okay, rule number 2 is where it gets really brilliant. It's all about asymmetry. His philosophy is, I'm only interested in trades where I can risk $1 to make 5. Think about what that means. With a 5-to-1 reward-to-risk ratio, he can be flat out wrong 4 out of 5 times and still not lose any money. I mean, how powerful is that? It completely flips the script on what it means to be a good trader. And his third rule? It's all about humility. When he says he's a slave to the tape, he's talking about the stock ticker, the actual price action. What he means is, your brilliant ideas, your PhD in economics, none of it matters. The only thing that tells the truth is the price. The market, he believes, always knows more than you do, so you have to listen to it, not your ego. Now, these rules are like the basic moves in chess, but what makes PTJ a grandmaster is how he combines these simple rules with this incredibly deep, complex view of the entire world.
This is one of my all-time favorite trading quotes because it just nails it. A regular stock picker might be playing on one chessboard, analyzing one company. A macro guy like PTJ, he's playing on like 5 different chessboards stacked on top of each other, all at the same time. He's thinking about how a tiny move by the Bank of Japan could affect German bonds, which then affects the US dollar, which ultimately changes the price of crude oil. It's all connected.
So his process is kind of like this. First, he starts way up at the 30,000-foot view. What are the big global forces at play? Debt cycles, inflation, what are central banks up to? Then he zooms in and uses his technical rules, like that 200-day moving average, to confirm his big idea and find a good spot to enter a trade. And finally, he takes the emotional temperature of the market. Is everybody greedy and euphoric, or are they terrified? He loves to bet against those extremes. So we've built this picture of a ruthless market operator, right? A street fighter who literally says he loves a bear market. But there is a completely different side to Paul Tudor Jones that creates this really fascinating paradox. I mean, just look at this. It's like Dr. Jekyll and Mr. Hyde. On one side, you have the ultimate predator in the capitalist jungle. On the other, you have this incredibly dedicated philanthropist. Just 1 year after the Black Monday trade, he co-founds the Robinhood Foundation, which uses the same kind of data-driven, no-nonsense metrics to fight poverty. It's an incredible duality, and it shows there's a lot more to him than just the numbers on a screen. Okay, so we've covered his story, his rules, his whole worldview. If we had to boil everything we've learned about Paul Tudor Jones down to one single, overarching lesson, what would it be? This is it, right here. This is the heart of his entire philosophy. For PTJ, winning isn't about hitting home runs. It's about not striking out. It's about protecting what you have, always, so that you can live to fight another day. Capital preservation isn't just one part of the strategy, it is the strategy. So these are really the pillars of his success. Number 1, protect your chips at all costs. Number 2, stay humble, because the market will humble you in a hurry if you don't. Number 3, never ever stop learning. And finally, you have to be able to adapt. The game is always changing, and if you don't change with it, you're toast. These are more than just trading rules, really. They're rules for survival. And that kind of leaves us with one last big question to chew on. You know, we live in a culture that's obsessed with offense, with scoring points, with going for the big win. But what if Paul Tudor Jones is right? What if the ultimate secret to winning, not just in the market, but in life, isn't about how great your offense is, but how unbreakable your defense is? Something to think about.